Hey guys, welcome back to We Talk Money. This is episode 31.
Yes.
How's it going, guys?
Great. How are you?
Man, you know, when Bitcoin's up, I feel good. But, you know, even when it's down, I feel good. Life is good no matter what Bitcoin's going, because we know over time it's only going one direction. So
long term.
Hey, yeah, man, a ton to talk about, guys. Again, go to wetalkmoney.com, subscribe to the show, submit a question. Let's just jump into it. So a lot of news on the crypto side to cover. Also, I know we've just recently had some developments on like the stimulus stuff, and we want to cover some trade alerts that you guys have had over the past couple of weeks. As of right now, just to give everybody kind of a idea of where we are, today is Tuesday the 20th, kind of midday. Bitcoin is testing 12K. And I recently tweeted this. When was this? This was yesterday. I said, you know, Bitcoin is up while stonks are slightly down. Maybe we'll start to see some negative correlation again. You know, it feels like over the past, really, I guess since the initial panic in March, the markets have really been in sync. You know, we saw evidence of negative correlation, and then it kind of flipped to positive. And I actually found some resources that kind of go a little bit deeper on this, but it's just really interesting to see that Bitcoin, you know, can go up when stocks go down, you know, and I think long term we're going to start to see more of that decoupling. But I don't know. What do you guys make of that?
Yeah. I mean, it's been kind of doing that, bouncing back and forth between negative and positive correlation for a while. And I know you did a lot of deep research on that, and it's just good to see, because that was one of the positives of Bitcoin, was that we did think we may have that negative correlation or no correlation.
Yeah.
So, and that's something that, you know, you want in your portfolio.
It was just over a year ago, actually. I think we did a video for your channel. I had crunched a bunch of data going back, I think, about 5 or 10 years on the S&P 500 index versus Bitcoin, and looking at correlation. And we did see that a negative correlation had developed from around the early 2019 through kind of the end of that year. Obviously this year it changed, like you said, with the crisis. But why do we care about correlation? We talk about in the video, an asset that's negatively correlated to traditional portfolio assets like stocks and bonds is incredibly valuable for not only all of us investors, but particularly institutional investors who want to have the smooth portfolio growth without major drawdowns. And the way that you get that is by having a portfolio of assets that are negatively correlated. So negatively correlated assets are really hard to find, especially now, these days, because even stocks and bonds became correlated. So if Bitcoin does start to become negatively correlated again to traditional assets, that will just increase the flow of institutional money into Bitcoin.
Man, I have not been this excited about crypto in a long, long time.
Neither have I.
Yeah.
I've actually become incredibly bullish on Bitcoin just over the past, I mean, I was already bullish, but things are just progressing to where it's like, okay, you can't ignore this anymore.
Yeah. And it doesn't have anything to do with the price, right? It's not the price that you're bullish on necessarily. It's the developments.
The price is like, you know, a consequence, and it's reflective of what's going on. And not only in our economy, but the shifts in our monetary system. Yeah. And but obviously the price, the technical analysis is looking mighty fine as well. Yeah. In Bitcoin,
it's following what the fundamental story is really telling us right now, with like over the past couple of days, the IMF coming out talking about we need a new Bretton Woods agreement, and basically, you know, they're facing the reality that the global situation, you know, the US dollar might not be the world reserve currency for maybe much longer.
Yes, and it feels like the fundamentals and the technicals are just aligning beautifully with Bitcoin, and that's what I really like to see.
Yeah. Now, going back to like talking about the correlation, there's this person that I found on Twitter responded to one of our tweets. They went back and basically looked at some of the correlation data between like Bitcoin and gold, Bitcoin and the S&P, and basically they kind of confirmed what we've known, which is there was a couple of phases here. Like phase one was like when the stock market goes down, when everything's panicking, everything goes down together. Also in phase two, the rebound phase, when the Fed injects a ton of liquidity in the markets, you know, all assets kind of rose together. And then like phase three, where we are right now, we're moving away from that initial shock and the initial kind of recovery, and things are getting back to, I guess, normal, where maybe we'll start to see more of that negative correlation over time. Also, you know, I thought this was pretty interesting, taking a look at, you know, Bitcoin's market cap in context, because I think a mistake that a lot of people made in the 2017 bubble is they just looked at the rise of Bitcoin from, a few $100 to like 20,000 and they go, oh, that's a speculative bubble. But when you look at the size of Bitcoin and what it offers, the price per coin is really arbitrary. It doesn't matter that much. It's divisible by 8 decimals, right? So when you look at like the market cap, which is really the thing that matters, and you look at what the market cap would be at certain prices, you can see, with Bitcoin right now at like $12,000, this is where we're sitting, JP to match JP Morgan and Visa, Bitcoin would have to be trading in between like 15 and 25,000 to just be at the same size as Facebook. It'd need to be at 40,000, Apple 100,000, gold, which I don't know the exact market cap, somewhere in between 7 to 10 trillion. You're looking at like $500,000 price of Bitcoin. And then to match the US's M2 money supply, you're looking at $1 million Bitcoin. Right. So these aren't like pie in the sky, just speculative guesses. This is like if Bitcoin continues to do what it's doing, which is now attracting institutional capital, sovereign capital, and corporate capital, like these numbers are not out of the realm of possibility.
Absolutely.
Yeah.
Yeah, I totally agree. We've talked about this quite a bit about long-term targets and about what could happen. And they're not predictions of what will happen, but it requires a set of conditions developing, and those conditions look more likely than they did even 6 or 12 months ago.
Yeah. Why don't we go ahead and just jump into this, which is Grayscale. For anybody that doesn't know, Grayscale is one of, if not the largest holders of Bitcoin right now. And Trav, you had some really interesting insight on this. What do you make of it?
Yeah, really fascinating. So Grayscale's, Grayscale, the reason it exists really, I think, is for, stock market investors to be able to put capital into Bitcoin because, you could go and buy Bitcoin on Coinbase or some other, or Kraken or major exchange. Lots of ways that you've talked about in the past to buy Bitcoin. But a lot of people who are dealing with, IRA accounts or other stock brokerage accounts may also want some Bitcoin exposure without moving money into a crypto brokerage. And a way to get exposure to Bitcoin is through something like the Grayscale Trust.
Yeah.
And so they've been attracting assets more and more over time. And I was shocked because I looked at their Q3 report that just came out, I guess, last week, and it showed that they have tripled their overall assets under management this year. I was like, wow, no. And it's becoming actually quite significant as a percentage of total Bitcoin volume.
Yeah. Yeah, it's exploding. And
they're up to, just real quick, they're up to 80% of all new Bitcoin supply in Q3 was sucked up by Grayscale buys, because as more assets go into this trust, they have to buy more underlying Bitcoin to back the trust. And so 80% of all the new Bitcoin mined in Q3 was hoovered up by just this one trust.
Yeah.
That's crazy.
Up from 25% in the first quarter. So they've like tripled the amount of Bitcoin they're buying just this year.
And this is without there being an official ETF for Bitcoin. So imagine a world where these products become more widely available, right? Because with Grayscale, as far as I know, you got to be accredited. Minimum is $50K, and there's a stupid 3% fee.
Yeah.
Right. So it's not, in my opinion, it's not the best option for individual investors like us.
You can buy the shares though on the OTC market.
Yeah, you're going to
pay amount, any dollar amount. You don't have to have that minimum, but if you're
going to pay a premium.
Fund,
that's right.
Right. And my question to you was going to be, do you think it's worth it for investors to be using these in their IRAs with the fees? There's a fund that has a 2%, like if you want to just invest in the Bitcoin only fund, that one has a 2% annual fee. But the one that you have pulled up there is actually a little bit more diversified and includes a few more coins.
Yeah.
That one's 3%.
Yeah, I don't understand why they're charging more to hold shit like Bitcoin Cash and Litecoin and Ripple. Like, I don't know. I'm not going to go down the rabbit hole in my opinion on this.
But do you think it's worth investors utilizing these in their portfolios? Yeah, tax deferred portfolios or.
So I guess you have to do the cost benefit analysis of like the fees minus like whatever tax savings you're going to have. Right. I personally, the hardcore like crypto guy in me wants to say like, no, like buy Bitcoin, hold your private keys, because if it's not your keys, it's not your coin, right?
Right.
But then, there is kind of that gray area, right? There's a middle path, and it's just like, buying like a gold ETF. Does it make sense to buy a gold ETF? Well, sure, if you want to be invested in gold and you're not worried about like actually having the physical metal in the case of a shit hits the fan scenario, like maybe you do both, right? But for an individual investor, yeah, go on an exchange like Coinbase, Kraken, whatever, buy Bitcoin, get it off the exchange, store it on a hardware wallet or something like that. That's probably the best option. Secondary options are either invest directly with Grayscale, or you could go on and purchase the shares, but you're going to pay a premium.
Right.
Yeah, it is actually trading at a premium to its underlying Bitcoin holdings. And that premium fluctuates, but I think right now, today, it was around 15%.
Yeah.
So that's a pretty high premium to pay to the underlying assets. Now, if you think Bitcoin is up 100% in the next year, then I guess the premium
is it going to matter,
doesn't
right?
matter too much. But
if you're going to have outsized returns by buying the shares, then maybe the fees and the premium doesn't matter so much to you.
Yeah.
But I would say it's definitely something to consider.
Yeah, absolutely. I mean, everybody's situation's different, right? We all have different goals, different timelines. Again, I think the best option, buy the coins, hold the private keys. Second best option, maybe something like that. I know our buddy Rocky, Crypto Hustle, he found a tax advantage fund through Canadian exchanges where you can basically buy, I forget the ticker, but he bought in his retirement account, and he's like, I pay a little premium, but whatever, I get the tax benefit, right?
Yeah.
So it just depends on what you're trying to do. Yeah. Taking a look at some other stuff as we run through the crypto portion of the show. I thought this was pretty interesting. There was a recent survey. How common is crypto? Shares of people who said that they owned or used cryptocurrency. If you look at the U.S., it's only about 7% of people. Japan, 4, 5, 6% in like Western developed countries. China, a little bit higher. You've got some places in Europe and South America where you're in between like 10 and 15%. And then look at Nigeria. About a third of people are familiar with Bitcoin or cryptocurrency.
Wow.
They had
that just goes to show you how important the ability to transfer money via what Bitcoin offers, the way Bitcoin offers, they are the unbanked, right? They don't have the access to the financial system that we do. That just goes to show you how important Bitcoin is.
Absolutely. And as we
move crypto.
As we move towards this world where central banks are now like tripping over themselves to create their own digital currencies, like it's only going to become even more important.
The demographics in Africa are interesting too, because that's such a young growing population across many of those countries in Africa, like in Nigeria. So that bodes well. Now, granted, they're at a much lower GDP and savings per capita in those countries currently, but as they grow over time, as they have this high adoption rate, that could really put some further upward pressure on Bitcoin ownership and buying as well.
Yeah, absolutely. So, I mean, that's why I've been an aggressive buyer all year, again, kind of like Raul says, what is it? Irresponsibly long Bitcoin.
Yeah.
Like I'm comfortable with my position. Like if it went to zero, it would sting like hell, but like I wouldn't be broke. So diversification is key. But again, that's why I've been buying on basically all the pullbacks and all the breakouts since March. It just makes sense, I think. And, I tweeted this today. There's only one way that I can describe how I feel about Bitcoin right now. You know that feeling when you have a slingshot and you pull it all the way back and you just feel that tension just kind of growing like this?
Yeah.
That's kind of how this chart makes me feel.
Well, it's kind of been a long time coming. You had to be really patient here.
Yeah.
And you still have to be patient. We don't know if it's going to actually break out.
No, we don't
Anytime
know,
soon.
But this is the longest that Bitcoin's held above 10K. The chart is telling us that 10K is support for now. You've got both moving averages to the upside. You've got the 100-period moving average closer to price, showing that the trend has been accelerating. And this is now 1, 2, 3, 4, like the half a dozenth time that we're testing 12K.
Yeah.
So again, I don't, the short to medium term is really hard to predict, right? For anywhere from 1 minute to a couple of months, who knows, randomness, right? But when we look at the mental models of how to value this over time, like it only makes sense from both a technical, fundamental, and market sentiment standpoint why we're holding up at this level.
I have a question.
Go ahead.
Are there a lot of shorts in Bitcoin? Are a lot of people shorting this?
Yeah, I mean, people. So there's some whale alerts on Twitter where you can basically see like liquidations of shorts.
Okay.
And I mean, it's typical short squeeze. I think we talked about this last week where we defined what short squeezes and pop stop runs are.
Yeah.
Yeah. People love to short and get run over in Bitcoin.
Okay. I wouldn't want to be short this chart. I can tell you that.
Yeah.
There aren't that many exchanges or places you can short Bitcoin. And actually, when I looked at the CME futures, the outstanding short positions were relatively low.
Okay.
But I know on some of those exchanges like BitMEX, you can use a lot of leverage. So maybe some of those short positions get a little bit larger by virtue of leverage. But I don't think it's actually that heavily shorted on a total notional basis.
Yeah, probably not. And the biggest thing, so, what was it, 2 weeks ago now when BitMEX got attacked by the feds? Here's what I think's happening. So an ETF is coming, right? Like institutional investors are looking at Grayscale and they're going, we want other options. We want a low fee option for this.
Yep.
Yeah.
I'm guessing here. I don't know anybody at the SEC, but my guess is that for the two things they care about, we were talking about this yesterday, the two major things that I think they're most concerned about is like price stability and reliability of the feed, right? They've been testing that with the CME futures. But when you have highly leveraged, unregulated futures exchanges that can manipulate price like BitMEX, that's not something that's good for the ecosystem, right? And I've been kind of outspoken about BitMEX for the past few years about a lot of the problems that come with this. That the other thing is like the KYC and the AML and the money laundering stuff. But I think the more important thing is just reliable price data and making sure that not one exchange can like step in and really manipulate or influence the price in a way that's just not real.
Yeah.
The volatility is an issue too, isn't it?
Well, volatility is fine as
Okay.
long as it's fair and legitimate trading, right?
I thought that was one of the beefs that the SEC maybe had with Bitcoin in the beginning.
Yeah, well, and that's why they're going after all these unregulated exchanges now. And even like mixers, we saw this today. I'm like jumping ahead here, trying to find.
By the way, we're now at a decade of price history, right? Or just over a decade of price history on Bitcoin.
Yeah.
That's pretty good.
Yeah.
I mean, that's better than a lot of stuff that gets listed in U.S. markets.
Yeah.
Very, very true.
There's
here it
tons of
is.
junk out there that we know.
So FinCEN just issued a $60 million penalty against an operator of a Bitcoin mixers.
Interesting.
So what a mixer is, for anybody that doesn't know, is a way where you can basically obfuscate the blockchain transactions to try to hide the movement of money because, Bitcoin it's only pseudo anonymous. I mean, it's very, very transparent. And, there's a lot of companies that do analytics for governments trying to trace illicit transactions. So this, we talked about this last week. I think the title of the show was what, like first they laugh at you and then they fight you. We're in the fight you phase, which part of it is I think government's trying to maintain control. The other part is like there are some good actors in the government that want to see Bitcoin succeed. And for that to happen, they have to have some level of control over, again, exchanges and stuff like that. My personal beliefs is that I think security should be inherent in the Bitcoin transactions where it is private. Governments would disagree with that. They don't like Monero. They don't like Zcash. They don't like all these privacy coins. And I think that's going to be a very big point of contention between investors and governments going forward. I don't know how that's going to end up.
But I do think you're right, though. With Bitcoin, it is a little bit more transparent. And there are the organizations that have been working towards the ETFs through the SEC for a number of years. And I think eventually they'll get there with a Bitcoin-specific ETF. I don't know about, other things like Monero, like you said, could be more of an issue. But
Yeah. Some other things we're seeing, stablecoin daily active addresses hit a new all-time high. So stablecoins are just taking off. This is an area where, with all these central bank digital currencies coming out, I think stablecoins maybe in the long term will get crushed by central bank digital currencies. I don't know. That's one path. But in the short to medium term, I mean, you can see there is demand for this, right? Real demand.
It makes sense. People need a place to park capital when it's not invested in digital assets. When they're on a digital, when they're on a cryptocurrency brokerage account, when they sell out of something or they have excess capital, they need to put it somewhere.
Yep.
And if the exchanges are prioritizing stable coins over, say, USD or euros or something like that, it makes sense that would. So that's actually kind of bullish too, because that would suggest there's more capital flowing into crypto brokerage accounts. I would guess.
Yeah. I'm actually doing a video series right now on Bitcoin fundamental analysis and looking at like on-chain metrics. And one of the things that you can look at is flows on and off of exchanges and some of the kind of like bellwethers that you can find with that kind of data. So
don't the stable coins also make it easier to actually like exchange your money into Bitcoin or start like buying a crypto asset?
Yeah, absolutely.
That's what I mean. Like what I'm saying with the brokerage accounts, like if you transfer money in or you sell something for some amount of time before you actually purchase Bitcoin.
And you don't want to put it in your bank account.
Yeah,
you want to leave it.
Yeah. It's faster than, the Swift payment system and ACHs and trying to get, cash from your checking account onto the exchange. Coinbase recently started doing something where they are doing like instant deposits where they basically like, I don't know if this is for trusted accounts or what, but like basically if you initiate a wire in, they'll give you instant credit for it, even though the money's not there. They just won't let you like withdraw it right away. So they're trying to speed that process up, but the legacy financial system is slow compared to stable coins. So yeah. Man, ever since we started talking about the central bank digital currencies, it's like this week, it's like bang, 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 just one news piece after the other. You got Canada now, doing job listings, talking about, they're now in the race. What else? We've got Powell yesterday said, well, look, we don't necessarily need to be first. We want to make sure that we get this right. But the reality is it is kind of an arms race with China. Like if China comes out with their yuan and, people start to adopt it worldwide, that's a problem for the U.S.
Yeah.
Yeah.
Maybe.
I'm skeptical that people outside of China will want to use a Chinese digital currency. I sure as hell don't want to use a Chinese digital currency.
True.
Just based on the types of government that, the types of things they want to do in terms of tracking and tracing and, shutting down certain types of transactions, monitoring your transactions, et cetera. That to me just seems like a place I don't ever want to have my capital.
Yeah.
But I feel like this has been the narrative, though, being careful to not let China overtake, let them be the world leader.
That's a fair point.
That's something that if they are first to do this and it's adopted and other countries are, it's just working, then that's an issue for the U.S. Absolutely.
Yeah. I mean, obviously, we would never want to participate in that system, but there is a risk there that, like, if they put something out and it works and people like it, that's not good. But in the short term, that's probably not the case because even their own Chinese citizens that they gave the free digital currency to didn't really like it, at least initially. So this article from Reuters was just basically, I'll recap this for you. So the China gave out about $1.5 million worth of their digital
helicopter money.
Yep. And it was basically about like $30 a person to like 50,000 people. And they literally like mailed it to them in red envelopes. And apparently people didn't really care. Because I guess like, you got to educate people on what it is. And in China, everybody uses Alipay and what's the other one? WePay. Yeah, everybody uses that anyway. QR codes are like all over the place already. Yeah. And so this isn't necessarily like mind-blowing tech to them. If anything, it's kind of like, okay, what is this weird stuff?
Yeah.
And why do I need this? Why is it in an envelope? So, look, this stuff isn't going to just take over overnight, but these are kind of like the foothills of what's coming.
Dumb question. What do you mean in an envelope? It's a digital currency, right?
Yeah, I don't
what do you
know
mean
the logistics
putting
of
it
how
in a
they
red
actually
envelope?
They literally they sent $30 to 50,000 people in digital red envelopes.
Okay, digital red envelopes.
I don't know if it was an email or it was via an app.
Okay.
Yeah, so I don't know
sure.
if anybody in China's listening to this and got it. Let us know what it what it looked like. But also Japan. So for anybody that's heard of this app called Line, it's basically like WeChat or WhatsApp. in Asia and Japan. It's really big. Apparently, I guess the company is developing a platform to help governments develop central bank digital currencies, maybe a way to quickly get these, I'm going to call them fake cryptocurrencies to people. You know, if you can like just pull up your app and it's like, cha-ching, congrats, you got, 500 Japan coins or 500 Taiwan coins or whatever. Like that could be a good use case and a good way to get it to people. But again, there's a big difference between truly decentralized permissionless cryptos and these scam coins that are created by digital banks.
Any central bank digital currency.
Yeah. Yeah, so I don't know, pretty interesting developments, and again, things are just going to move really fast from here on out, I think.
Where does that leave banks? Traditional banks?
Man,
tough spot for them, honestly.
Very tough spot.
They're getting hit on the one side from, some of the innovative companies like Square and PayPal. Maybe not PayPal. PayPal's not all that innovative, to be honest. But Square and some of the other payment providers that have been moving quickly, and then they're also potentially could get squeezed by the Fed if they do create some sort of digital dollar. They could disintermediate the banks, because if you don't need a bank account with a traditional bank to actually receive stimulus money or tax refunds, you can just get it straight from a account with the Federal Reserve. What role are the banks really playing? I mean, they've already been losing market share in lots of different areas, whether that's trading desks or even in the mortgage market. They're losing share of refinancings and losing share of new originations. And what are they even doing anymore?
Yeah,
I should say though that JP Morgan Chase earnings last week looked great and they're still growing, so they're doing something.
A lot of the asset management side is contributing to a lot of the bank's performance, and I think even Goldman Sachs, I always confuse, it was either Goldman Sachs or Morgan Stanley. I think it was Morgan Stanley. They're trying to actually get into more asset management.
Yep.
They just bought a mutual fund firm.
They bought E-Trade.
Because they want access to that asset management side and the trading side. They even know, hey, traditional financial system, we need to get over here on the investment side.
Yeah.
We
Especially with interest rates being so low and I mean, like you said, they're just getting hit from all sides.
Yeah.
I don't really know what their purpose is a decade from now.
Yeah. Looking out further, that's exactly right. It's well, especially your second and third tier banks, what role are they really playing?
Yeah. What benefits do a local credit union offer that?
Lower rates.
And that's also a little bit different too. I could see that succeeding just by having more direct relationships for lending with local businesses. I'd be more worried about, that's why Wells Fargo trades at such a cheap valuation and looks like, on paper, like a cheap value stock, but never seems to go up, is that one, you got headwinds from interest rates and things like that, but also they can't grow. And what role are they going to play in 10 years if you got JP Morgan winning on the top end and then you've got local banks with the relationships, on the closer local side? What role is a Wells Fargo going to play?
Yeah.
I don't know. That's a question in my mind. Now, Wells Fargo is still massive. They still hold, however many mortgages and business loans, but
they work with merchants.
Are they only going to service, large Fortune 500 companies at a certain point? It's interesting to think about how that evolves. They're in a tough spot.
So I guess the lesson is leverage long Bitcoin, leverage short the banks.
It's a dangerous trade. I don't know if I'd want to be short Wells Fargo at 6 times forward earnings.
Yeah, anything in the short term could happen, right? Yeah. I think you're asking for trouble if you just go all in, trying to short the banks right now.
Yeah.
But the long term play and maybe am I going to say safer play is just to buy Bitcoin? Again, you got to take volatility into consideration, but when you look at the risk adjusted returns, nothing offers the profile.
And me, I'm a stocks guy, but I also own Bitcoin. When it clicked for me a couple of years ago, it was just I have to have some of this in my portfolio. You don't have to be all in on crypto or all in on traditional finance. You can kind of have a blend, and especially with the negative correlation, if that develops and continues to stick around, it's
even more so.
Best of both worlds.
Yep. And so to your point about you guys mainly focusing on stocks, that's good too. You can make a ton of money, and there's a long history of, the stock market being the best wealth creation vehicle, no matter what we think in the short term about the Fed and the future of money and stuff.
We're still going to have corporations.
We're still going to have
innovation.
Yeah. And why not participate in that?
Yeah.
And why not try? I mean, you guys have had some great trades that we can cover here in a minute too. I think one of the mistakes I see people in crypto make is they just say like, oh, screw the stock market because of the Fed and because of my personal beliefs around that. And I would just encourage people like, dude, if you write off the stock market as just a scam or a place you don't want to be at all, I think you're doing yourself a disservice.
It's already proven to be a mistake after the '08 crisis when everyone was screaming that, the Fed is basically pumping the stock market up and that all the money printing is going to cause runaway inflation, all these things, right? And that proved to be not a great time to be a pessimist in the stock market.
Do we have that chart on the unemployment rate versus forward returns in the market?
Yes,
right here.
Yeah.
So this was a great graphic that someone tweeted out this week, and essentially shows that your best returns, your best forward returns in the overall market, at least in the U.S. markets, came when unemployment rates were above 9%. And that's just really counterintuitive. And actually the worst returns came when the unemployment rate was at its lowest level. I mean, essentially what this says is what we already know: buy low, sell high. You want to buy when the market's already sold off because the economy's kind of in the gutter.
Yep.
And that's when the market is offering usually a value.
So I wonder what is this frequency? So it says for those like listening on the podcast, you've got unemployment rate, and it gives different tiers, like less than 5%, 5 to 7, 7 to 9, and over 9. And then it shows the returns are the highest when the unemployment rate is the highest. And then the frequency, is this by month or year, or do we know?
I thought that meant how often that unemployment rate is occurring.
Oh, that makes sense.
That's what I thought.
So basically there's the lowest amount of frequency is when the unemployment rate is really high, and that's also when you get the highest returns. So the highest returns come in the shortest periods of time when things are the ugliest.
Yes.
Yep.
Doesn't happen often.
This is like, the unemployment rate's going to be above 9%, and the market will have already declined at that point, because we know that the stock markets tend to lead the unemployment rate. They sniff out when the economy is weakening. And so like we saw in March, the markets declined really, really fast before the unemployment rate actually massively ticked up. By April, May is when we saw the unemployment rate follow. So by the time you're already above 9%, if you're at double-digit unemployment rates, it's very likely the market's already sold off dramatically. And that's at the point where the market starts to probably become a value because everybody's super pessimistic.
Yeah.
Again, buy low, sell high, but most people aren't going to do it. Most people aren't going to be buying, at the
into the depths of the darkness.
Well, a lot of people were calling you guys crazy in March when you were buying all the dips.
Yep. That's right.
Yeah, everyone was like, well, not everyone, but some people were like, aren't you going to wait a little longer to see if the market's going to keep selling off? No, it might be too late by then,
Yeah, we got to pull some of those clips from the early show and talk about that, because, you guys did nail a lot of those plays. All right. Hey, good news on the, I guess, risk of catching coronavirus when you're flying. I guess it's very, very low probability.
I can see why. I mean, they're recirculating the air. They're running all the air through filters, HEPA filters. I know many people that have flown multiple times through this whole entire pandemic from March to now, and nobody that I know that's been doing that has gotten sick, which is anecdotal.
Yep.
But I found it fascinating, because I would think like, that's good. If you're going to get it, that's where you're going to freaking get it.
Yeah.
And obviously if someone's sitting next to you and coughs, that's obviously high risk if they have it. But overall, the way that the planes are recirculating that air, I don't know. I just flew for the first time. I felt pretty damn safe.
Yeah. Do you think it's a function of just everybody wearing masks and being aware of like, okay, this is inherently a riskier situation where you pack a lot of people in close quarters. So wear your masks, have good air circulations. And then it says your chances of COVID exposure on an aircraft are nearly non-existent, even if your flight is full. I mean, that's pretty big. And then, Trav, I know you've been tracking this pretty closely, the TSA traveler numbers.
Yep.
What do we see here?
Yeah, so it actually hit 1 million passengers, 1 million daily passengers for the first time since the crisis started, just this past Sunday. So ticked up above 1 million. Obviously, the normalized numbers prior to the crisis were more like 2 million plus, but it has recovered pretty nicely and continues to chop around, but generally has been recovering and headed in the right direction. So yeah, good to see that $1 million figure surpassed. Hopefully these lines keep going up and to the right.
Yeah.
Do you think even with a second or third wave, whatever wave we're in, first wave, I don't freaking know, that we're still going to continue to see these numbers increase if this data is true?
What do you think?
Yeah, I think it's possible more and more people get more confident over time.
Yeah, I mean, especially with this data coming out saying like the risk of infection is low, I think that's going to give a lot more people confidence. I mean, we'll see. I know some parts of the U.S. are spiking really big, but the deaths aren't exactly going up for several reasons we've talked about. But
yeah, weirdly, there's been some spikes in a lot of Midwest and even rural counties in the U.S. When I looked at the map earlier today, it surprised me because there weren't as many urban areas that were seeing spikes. It was a largely rural and Midwest state phenomenon, which I thought was interesting because I would imagine that there's a lot less density in those areas. And so people coming in contact, the probability of that would be lower, but that's where we're seeing a lot of the spikes in the U.S. Now, Europe is a whole nother story.
Yeah.
They're seeing spikes across Western Europe, and they're actually having to do more shutdowns again. But
their death rates are...
That's true. The death rates are low as well in Europe.
They've stayed low, even with this spike. I think someone in our community actually posted a chart of...
I think it was Belgium or Holland?
Holland.
Yeah, Holland.
I mean, huge spike in cases, but the actual death rate is low. It's
that's
down
good
at the
news.
bottom.
Cases up from less than 1,000 per day in the Netherlands in August, September, now ticking to about 8,000 here in October, but the deaths are still like 10 per day.
Yeah, so if this trend continues and with the spikes, we continue to see the low death rates, then I imagine we're going to be able to find some way to actually function and get this economy either continuing to get back to normal or steadily staying where it is now. Hopefully.
I think that's a good time to like segue into stocks because I know a lot of stocks are really hinging on a lot of these numbers.
Yeah.
And I know you guys have had some pretty awesome trades with all this recent volatility. Over the past week, we saw the NASDAQ kind of pull back a little bit. I guess really all indices just had a little bit of a pullback. I know you guys had some news you wanted to cover. So unloved value stock seen as a cautious bet as the election nears. Nikki, what was on your mind about this one?
Yeah, so obviously value stocks have been unloved for a very, very long time. But in my opinion, some of the valuations in some of these stocks have gotten so depressed that what the person in this article was actually trying to say was that the value stock play could be, or the trade could be a hedge, if we do see a recovery, if we do see stimulus, if we do see the death rates are continuing to be low and we're able to actually keep our economy running, then the value trade could end up actually being a pretty decent one, and people may kind of shift out of those high flying growth companies into a little bit more value. So she was kind of proposing it as like a hedge trade. And I can see that. I get it. Especially with the airline information, if that is true and, people become more comfortable flying, that helps so many other parts of the economy. If people are flying, that helps businesses that are selling food inside of the airports. That helps the airport to generate revenue. That helps people get, over to other places and maybe go eat at more restaurants or
tourism,
whatever.
Yeah.
Tourism. Finding safe ways to do that. I think the value stocks are going to be a beneficiary of that if it plays out that way, which I don't know if we're going to see more lockdowns or not, at least in the US. And I don't know how many lockdowns we're going to see in Europe, but to be determined.
Yeah.
And also the Russell actually caught up. I know that some people were really down on the Russell and shorting the Russell.
Yep.
But over the past 30 days, the Russell has outperformed the S&P, and it actually caught up pretty quickly.
Yeah, on a 3-month chart, the Russell and the NASDAQ are basically up the same percentage, up about 10%.
Yeah.
Yeah.
10, 11%, each of them.
So, yeah, that's something.
Interesting sign, yeah. We have a nice blend, or I believe you do as well, but I certainly do in my portfolio, a nice blend between what I think are just really exceptional value plays that I think are still very good companies. They're not just statistically cheap. They're actually good companies, but they're also very, very cheap and could be up a lot from here. And then we also have our more high growth plays that we're willing to pay a little bit higher multiples for, but we also think could be long-term winners. And I think you don't have to be all in or all out on value or growth. I know growth investors have probably been the ones that have, been outperforming over the past year, but the valuation multiples have expanded so dramatically on some of those growth stocks that I would be afraid. I'd be afraid of a 2000 like crash in some of those hot stocks that are just at absurd valuation levels.
I mean, Fastly was a stock that just came out with an updated guidance, and their stock fell a ton.
It was like 30-40% in 2 days.
FSLY, and they're a high flying growth stock.
Wow, talk about a trap. Yeah, it looked like a breakout and then a massive.
This is what I believe you and I have been saying is this is what can happen to these high-flying growth names if they don't perform to perfection.
Yep.
So you just have to be ready as an investor for that wild ride, potentially.
And we're right now in the thick of Q3 earnings reporting season, so we do start to get some of those hot growth stocks and tech stocks reporting this week. I believe Snapchat, Tesla, Intel's not a hot growth stock, but that's in the tech sector. We get them this week, and we're starting to get. Is it Netflix this week as well? I think they may be on the docket this week as well. So we'll be really interested to see how these stocks react to the Q3 earnings, because I don't think Q3 earnings are going to be bad for a lot of the fast growing tech stocks, but if they don't hit their numbers to perfection or exceed their numbers, given the valuation multiple expansions, we could see some real downside to some of those stocks like we saw with Fastly.
Yeah.
So it sounds like it's like in a lot of these tech stocks, it's like a crowded trade. It's like everybody's in them because of tech and because there really hasn't been anywhere else to go, right? With all the fear in the economy, it's like, well, what do you buy? Everybody's like, well, buy tech that's outperforming.
Yeah. No one wants to buy growth or value. Sorry.
Yeah.
No one.
And maybe that's what's given like, stocks like, well, I guess Peloton's kind of a mix of like tech and consumer, right? Like they've got a tech angle, but they actually sell stuff and they have revenue.
Yeah.
I've noticed this chart pattern a lot where this year we've seen a lot of stocks that have like this multi-month accumulation range. And then when they break out, they get like a quarter or two of just epic rips. One that, Trav, I think you're in is Stitch Fix, right?
Looking very strong, similar pattern.
If we look at this chart, like there was a little bit of a fake out breakout back here last year or 2 years ago, but it's basically had a multi-year accumulation range in between, like call it like $15 to $30, and it's starting to peak up above that. So you got in, I think in the spring when it
$13 a share. This is a company that I'd followed for a while. It sold off 40% after hours on their Q1 earnings results. And I was following the results. I was listening to the conference call. It was like, these results looked fine. And I'm more focused on the longer term development of the business, the initiatives like direct buy that they've been working on that will expand their total addressable market massively. They took a small revenue growth hit because of the crisis in the short term. But if you're looking long term, they're developing a lot of really interesting components of the business and still executing well. And so it was like, this stock sold off 40% in one day on the Q1 earnings results that I thought looked fine. And I was like, I'm in, I want some. And it's about a triple or just under a triple now. And I think longer term still has some room to go much higher. But like you said, you start to get the momentum traders involved on the breakouts, and this thing can go to crazy levels in a hurry.
And it's highly shorted.
Yep.
Oh, it's still highly shorted?
What is the short interest on it?
I think it's 30 or 40% of the float is short. Yeah.
Which is really high, and they are executing, and I actually think they have some growth levers to pull with kids and men's.
Really?
Yeah. And I actually I unfortunately wasn't as cool as Travis, and I didn't catch this one because I wanted to actually try the product. And because I had my doubts. But now after trying the product, I feel much more confident, but I might be late to the party.
I mean,
go ahead.
Oh, I was just gonna say quickly. I mean, I don't think they're like in the clear skies for like massive growth right off the bat here. There's still going to be some headwinds for them. They're still transitioning their business away from the traditional subscription business, which I think makes it a little bit slower to grow because not everybody wants to get on a subscription to buy clothing. But their direct buy business really is the future, and they could become like the online department store of the future if they nail that. So we're still early days. There's still a lot to be executed on for them. They need to do it well over the next 2 years before we really get full confidence.
Yeah.
So I just want to put that out there and say this thing isn't, I'm not 100% confident in it, but I think the probabilities are in our favor that you've got a good leader, really, really good initiatives in place. We just need to still see that play out. But
yeah, because I think this business model of what would you call it? Mail order clothes? Is that what you would say? Yeah. So there was a company that I tried before that I know they went bankrupt and they came back. I don't know if they're still in business. Jacked Threads.
Oh yeah.
Are they still
Jacked
operating?
Threads?
Do you guys know?
I don't know, but
someone bought them, but I don't know if they ever did anything with that.
Yeah. So that model's been tried before, right? And I don't know why they had issues, but I wonder if Stitch Fix has kind of figured those issues out or.
I'd be curious for both of you boys to try a Stitch Fix box.
Let's do it.
Can you do that for
down.
me?
Yeah, we'll try
Market research.
And I think they're supposed to get better over time too. As you get a couple of boxes, the algorithms really start to understand your fit and your style a little better. But for me, the issue with things like Stitch Fix or Trunk Club or Jack Threads was always after a couple months, I'm going to have too many clothes. I might need to take a break for a while. And I think that's the problem with a lot of these services is that people churn off, at least for some amount of time, because they just get too much stuff after a certain period of time.
Well, Stitch Fix allows you to control when you get your boxes.
That's true. Yeah.
So.
Yeah.
And I think you were saying yesterday, Nick, that if say we get another wave and people don't leave their houses, that could also put maybe some pressure on their sales.
Yeah, that's something I'm definitely concerned about is, if we do see more lockdowns, people aren't going to need clothes. Yeah. What are they going to need clothes for? So that is a concern. But Stitch Fix was quick and they moved into activewear and their activewear business grew, I think, over 300%.
It was a crazy high triple-digit rate.
It was crazy.
Yeah.
So they were smart and they shifted.
Yeah.
They knew what to do.
Yeah, I mean, they probably looked at Lulu and went, okay, everybody's wearing activewear.
Yeah.
Yeah. Nordstrom did the same thing. They've added their own activewear line. So, these companies are pivoting. Stitch Fix, the thing that I've always admired about the company is that they're so technologically focused, similar to how I would say Netflix was early days on algorithms and software and utilizing the best of technology and humans to create great recommendations for customers and tailor things, make it personalized, make it fresh and relevant. And there's not a lot of traditional department stores or other companies that compete in this massive apparel retail market that are investing as heavily in technology as a company like Stitch Fix.
Maybe that was the problem with Jack Threads is I think I was picking out my own clothes. I can't remember. It was a few years ago. But yeah, if they have a great algorithm, that's huge.
They've been able to take the data that they get and the feedback that they get and create their own brands with solving the problems that they're getting told are problems. The sleeves are too tight or they're too long or doesn't fit right here. And so they've basically been able to create their own clothing lines solving all of those issues that their customers have.
Yeah.
So that I think is pretty powerful. And I also think about how this could move into other segments of retail, like home, or maybe you take a picture of your home and it recommends, how to design it or something, or you put in your design profile and
it's kind of creepy. Alexa, design my home for me.
But
the package shows up.
Yeah.
I wish somebody could do that for me. I'm not a great designer. I'd love to take a picture of my home on my iPhone 12 with my augmented reality thing.
With the new LiDAR.
And then someone just tell me what I need to put and where and send it to my house.
Yeah.
That's pretty brilliant.
Okay, so Trav, I'm going to put you on the spot. Say Stitch Fix does succeed and they're crushing the game based on, some reasonable valuations. Where do you think this thing could go to?
Well, they're doing about a $2 billion annualized revenue run rate now. I mean, again, this is a multi-$100 billion just in North America alone retail apparel market. And like Nikki said, if they could even expand into other segments, that makes the total addressable market even larger. Yeah. Now, they're never going to be the majority player. That's just retail. There's always going to be a number of players. Yeah. But I think it's conceivable they could be at $10 or $20 billion of annual revenue in, say, a decade. And typically online e-commerce companies that execute well, that have reasonable margins as they do, will get a 2 to 3 times revenue multiple. So we're talking a market cap potential of maybe 20 or 30 billion dollars. Like I said, maybe over a 5 to 10 year time frame from now.
So this could be like a 10x play.
Yeah. Yep, that's right.
Cool. So, all right, you guys heard it first. $350 Stitch Fix.
there's a lot that has to happen for them to execute well and to take share and to do all the right things before that happens and that plays out.
Well, now I want to talk to Katrina Lake, who's the CEO, about this interior design idea.
Yeah.
And
so maybe that could open up even more.
She's very well respected, very sharp.
She's very sharp.
Yeah.
I want to be her friend.
And they just have a good management team. They actually did pull over the head of recommendation algorithms from Netflix to lead their algorithms team for some amount of time. So they have a very deep bench of technology expertise as well.
Nice. Well, dude, great job. Like basically low ticking this thing. I mean, catching the bottom of the accumulation range. That's awesome.
It was scary, you know?
I remember when you took that trade too. I was like,
yeah.
Nice. Well, Nick, I know you've had, I guess you've been taking more profit this past week, right?
Yeah, I've been trying to raise some cash.
So yeah, what's your thought with trying to raise cash right now?
Well, my cash position just got lower than I had wanted it to be.
Yeah.
And so I was like, okay, we're going into an election. Not that I am anticipating or I don't know what's going to happen, right? And I'm not trying to invest based on that. But I do want to anticipate volatility at least and have something in my portfolio to deploy if I need it.
Yeah.
So I took some profit on some things like PHM, which is a home builder that was up 100%.
That's Pulte, right?
Yeah. Which I think still has some potential to go higher, but I have a runner on basically. I didn't close my whole position. But that was a place I pulled some cash out of. I also pulled some cash out of Square, which has become a pretty large position in my portfolio. So this felt like a good time to take some profit, considering where we're at and
I'd
what
say
the
a
stock
run
has
from
done.
what was that? A run from $9 to almost 200.
Yeah, I actually have an almost 2,000% gain on Square.
Hell yeah!
Yeah, it's my first
20 bagger.
So that's exciting. Now, how am I going to top that? I don't know. We'll see. Maybe Lulu will help me with that. But
Stitch Fish.
yeah, so I just decided to take some profit there. And then I went long SBE. And Travis, you bought some SBE too.
Yeah.
I think we talked about this a couple weeks ago. This was the EV charging station SPAC.
Yes,
That's right.
We talked about it on a recent We Talk Money episode in more detail, but basically I think this thing can really have momentum, and that's why even though the valuation as a value and focused investor, I don't like buying those types of companies, but with this, and I've done this before with things like Virgin Galactic, you can kind of sense the momentum or anticipate the momentum and trade it.
Yeah.
So, but I also think as a long-term hold, this could really have a lot of potential to grow. So I don't know. I like it as a short-term play and a long-term play.
Yeah.
So you're basically swing trading it and maybe going to hold a core position?
We'll see what it does. It's one that I'm in long-term, but if it moves the way things like DraftKings and, Virgin Galactic and Nikola did, all these crazy SPACs that can double, triple, whatever, quadruple. Like, if it does that, then I'm probably going to be like, okay, I'm going to take some profit.
Take some more off the table.
But say the market like dumps, right? Like pre-election or whatever, like you would probably cut this off, or would you hold it forever? Or
this is one that I would probably hold my position long term.
Okay.
Yeah. Or accumulate more if we do dump.
Interesting.
Because of what we talked about last time. I mean, the TAM, the total addressable market, is huge. EVs are on the rise. California is trying to ban,
ICE cars by 2035 or new sales of ICE cars.
Yeah. So, I mean, there's a lot of moving parts to this.
Yeah. I mean, we're just on the front end of what I think will be a pretty large share shift from ICE vehicles to EVs. We're seeing even traditional companies like GM this week announcing that they're starting the manufacturing of their first electric SUV. Of course, we've got companies like Tesla expanding capacity. Volkswagen released the ID.3 in Europe. That's been actually selling really well. So you've got a pretty big shift here from the traditional automakers into offering a bigger EV lineup. And so I think it's pretty clear that EVs over the next decade are going to grow very, very quickly. And ChargePoint, being the provider of a lot of the charging infrastructure for EVs in retail shopping centers, apartment buildings, things like that, they are going to just have this massive tailwind. And you want to own companies that have tailwinds generally, you know, and
tailwinds that people can get really excited about, and sentiment helps.
Absolutely. So when you talk about, the stocks that get hot, like DraftKings, they have these markets like online gaming that are opening up, and, these big, huge TAMs, and they become story stocks. And so, it's probably going to trade up well above what it should be valued at in the near term based on its financial metrics. But, sometimes you want to own these things at small market caps, even if they're a little bit overvalued in the short run, because in the long term, they can just be multi-bagger, massive winners.
I mean, look what happened with cannabis. All those cannabis stocks went ham.
Although they went ham, and then they crashed.
Not good anymore. Yeah. But that's the thing. You have to know. You have to know what you're doing.
Yeah.
You were buying the story with cannabis stocks back then.
And the story worked, but then the fundamentals collapsed because there was just way too much competition. Not enough demand came into the market quickly enough, and so in the short run, the businesses themselves just really went down dramatically in terms of revenues and profit margins. And so we'll have to watch that with something like ChargePoint. If it gets increasingly competitive in that arena and they start losing money on incremental charger installations, then that's when you probably want to cut.
Maybe they have more of a moat, right? Because they're doing like physical installations and like who can really compete, where like in the cannabis space, anybody can grow weed. Anybody can sell weed.
That's right.
No, that's right.
And I guess that's why, like you said, I mean, things got ahead, and you can trade the hell out of these. You can make a lot of money on the way up, but it's kind of like trading altcoins or like smaller cap cryptos. You got to know when to get out, because when that rug gets pulled, the thing collapses.
Yeah. So we'll continue monitoring the fundamentals at SBE, and I think they're going to have some really interesting partnership and volume announcements probably in the next 2 years that should help the stock. We don't know what the general market's going to do, obviously, so that poses headwinds potentially, but I think it's a pretty good story as it stands now, with the potential to really have some financial metrics that look good.
Awesome.
And I see a lot of potential too with apartments and condos, individual charging stations that residents can decide to put in.
Because they're going to need them, right?
Yeah.
Like anybody can throw one in your house, but if you're in an apartment complex, what are you going to do? Go sit out front? Like they need a lot of them.
Yeah, if we go from 1 out of every 200 cars are EVs to 1 out of every 10, even that, even a small penetration change like that is millions of cars, and therefore probably millions of, or maybe hundreds of thousands of chargers.
Yeah.
That need to get installed.
Awesome. There was another chart that kind of had this accumulation range breakout pattern that I was looking at. I don't know anything about the fundamentals, and I don't know if you guys have been following this closely or not, but Pinterest recently had a new breakout.
That's my stuff.
You own some, right?
Yeah, I'm long Pinterest.
Okay. Yeah. So where'd you get in? What's your thought?
I was in around 20, in the 20s on average. That was like my average
back
price.
Back here in the dip, or where?
I bought before coronavirus.
Oh, okay.
hit.
So it was like back here in 2019 or?
It was in March, but before
the
like
crash?
First week of March?
Okay.
It was even
somewhere
before
in
that. Yeah, and then I bought again after the virus and the sell-off, and I had like an average price around 20, 21.
So again, you kind of like you did on Stitch Fix, like you got in kind of on the lower side of the accumulation range.
Yeah.
Now it's breaking out. What are your thoughts here? Is this a long-term hold? Is it a swing trade, momentum?
Well, I'm going to have to watch the valuation on this one, and it's really going to depend how earnings end up looking. But the idea here is that they have a lot of potential with monetizing their international user base. They've done pretty well in the US, and their revenue per user has been growing, but the international side feels like there's some room to go there. And also, Pinterest is kind of a comeback story in the US. It was really popular in 2008, 2000, like after the financial crisis, it became hot.
Yeah.
And then it just kind of died off, and it wasn't really used that much by people. But it's starting to become really popular again, especially with stay at home and people wanting to redesign their homes and renovate their homes and, get comfortable. So they're doing a lot of things to try to grow again here in the U.S. and internationally they're still growing. But I don't know. They have an ads business. So similar to Facebook, similar to Google, that I think could see some growth as well if they can make a few tweaks there and get that right. But apparently it's very lucrative for the advertisers. Like the ROI for the ads are apparently really good. There's still a lot to be seen here, but the stock has been really, it's performed well since March.
Yeah. It seems like that's kind of a theme over the past, 20 years is like you'll have a platform where it's really cheap to advertise on and then everybody will figure it out. First it was AdWords, Google, like it used to be dirt cheap to run really qualified, high quality traffic. And then that got arbed out. Then Facebook, and then now maybe Pinterest is kind of the next wave of that.
Yeah, we'll see.
Trev, I think, do you own Twitter?
Yep.
So is Twitter kind of a similar story to that, or like what's the deal there?
Yeah, that's definitely part of the story there with Twitter. Twitter's been under monetized. The ads platform really has not monetized its traffic well because Twitter's user base growth has been really rapid over the past 4 to 5 quarters. They have really become a key place for people to go to for like news and real time sports, politics, stuff like that. Obviously the president is using Twitter as a platform, so it's become a much more important platform in terms of social media, but the revenues have not followed because their ad platform just frankly wasn't that good. They weren't catering to like small and medium businesses the way Facebook has.
Yeah.
Their ad formats are just not very effective.
They're terribly targeted.
Yeah. So they had they had enough data to target really, really well. But advertisers haven't seen as effective ads as they do on Facebook because ad formats are not as quality. The targeting still, even though it could be great, hasn't been as good as it should be.
Yeah, I can tell they're trying with the targeting, but it still sucks.
So they have been working on a new ad server, a new ad platform for the past 6 to 12 months or so. They're finally trying to get their act together because they've got some activists pushing on the board finally. And that could pay dividends over the next year or two. And so that's why the stock, I think, has been pretty strong in the last couple of months. Still huge potential here for Twitter to become a much larger company if they could just focus, execute, actually roll out product features faster the way that, say Facebook does. They're just really slow. They're just frustratingly slow at everything.
Dorsey, he's got Twitter and Square to deal with. So
yeah, I mean, Twitter needs a full-time CEO.
Yeah.
They need to really push on the product management organization harder. It seems like a great place to work. All the comp and benefits and praise they give each other, that they're doing such great fundamental work for the world, but shareholders don't ever seem to benefit. Expenses have been rising much faster than revenues over the past 2 years. So they just need to get their act together. Stock's actually suggesting they will get their act together. And, that's why I own it, because I do think the potential for this to become much, much bigger over time and much more financially successful is there.
Yeah, I mean, the chart is definitely signaling some bullishness. I mean, if it breaks 50, it's kind of this similar chart pattern that I've seen.
This is another one we picked up in the depths of the March sell-off.
Oh, really? You guys were in the 20s?
Yeah, we were buying this during the sell-off, I remember.
Yeah. Nice. Man, a lot to think about, There's definitely a lot of opportunity here. I mean, I don't know.
There's a lot going on. Like we've been on a pretty long show today because there's so much going on in markets, politics, the world at large, like crypto, stocks.
Stimulus. Oh yeah, we didn't even get to talk about that.
Yeah.
There's a lot happening this week.
There was a headline
this month
about Pelosi says stimulus deal possible by day's end. Dow up 250 points.
Yeah, this just popped, I guess, about an hour ago.
We'll see about that.
I feel like Charlie Brown going to kick the football again, and they just keep pulling the rug out from under us.
It's the new China trade talks.
Yeah.
Remember that when the market was every day was China trade talks?
Yep.
Also, it looks like Google just got hit with an antitrust suit.
Stock is up though.
Yeah. It didn't even touch
Doesn't
the
matter.
stock.
Yeah. I think Google actually, there are some legitimate arguments there about Google preferencing its own properties over other companies like TripAdvisor or Yelp or whoever else, and so pushing other people's organic search results down. But I don't know who wins that case. It seems that investors think that Google will either just pay a fine and be fine, or if they do break up the business, it could actually be worth more because you start to spin out parts of the business like YouTube that are growing fast, that are worth a lot, or, you know.
What if all this antitrust stuff ends up being a boon for all of these big tech stocks? And
hey, it could be.
And all that they break them out, and then all the value, everything still just goes up.
Yeah. Interesting. Well, I know we went pretty long today. We can do Q&A next week. So guys, don't forget, go to wetalkmoney.com, submit your questions for the show. Any final thoughts, questions you guys want to go over?
I was going to ask you guys like a fun question.
That's okay. We can do some fun here.
Well, it might not be fun for you, but I was going to ask, what is your dream retirement? Have you ever thought about that?
Yeah.
Okay.
You?
What age are we talking about?
Yeah,
well, it's your dream retirement. You choose.
Well, I mean, I was basically ready to retire, I guess, over the past couple of years. Like, I think we put, 350 hours on the boat. And
do we consider ourselves retired? But
so retirement to me just means doing what we're doing now. Like, I don't care if I'm a billionaire or broke. This is what I want to be doing, is hanging out with you guys, talking markets, helping you guys make money, helping the followers of the show and our community.
So we're going to be 80 sitting here doing the podcast.
Probably. I mean,
I Talk Money, episode 3,946.
When we had fiat guys.
Yeah. What are we going to do? Go sit on a beach and...
too much leisure. Just I get antsy. So for me, it's never been about, when I was able to achieve some level of financial freedom, the beauty of that is then it becomes, well, what do you really want to do? What projects do you want to work on? And that's a luxury, obviously, that we have now. But I definitely don't want to spend it just sitting around on a beach somewhere. Like, I want to do things that try to either move society forward or just help people, like we're doing with, We Talk Money and some of our investment community stuff, where we're just trying to help others get to the same point where they can have that flexibility and financial freedom.
Yeah. I had to have a come to Jesus moment with myself and look at, okay, well, what do I really want to do? And what is work that's worth doing? And I kind of boiled it down into some criteria. I got real nerdy with it. And it was basically I got to love the game. Mm-hmm. If it's not fun, why am I doing it? I don't want to go run a restaurant, because to me, that's just not fun. Right. It also has to make money. That's a yardstick. There's got to be a profit motive there. And it's got to be something that I feel good about, morally and ethically. And I got to feel like I'm contributing. So only investing, sure, that satisfies the money and the game part of it. But it's giving back to the community and helping other people build wealth, and hearing from people that are holy crap, man, I've made a life-changing amount of money in the community with you guys. That's what really gets me excited. So I don't know, that to me is retirement. I'm living that now.
Yeah, I think my answer's similar. I would like to, there's more things I still want to do, more places I want to visit. I have this idea of spending more time, months at a time, in other locations where I have kind of a second or third home base.
Yeah, same.
So that would be cool.
Yeah, we're working on our ski lodge. We want our ski.
Yeah, so let me kick the question back to you then. What is an ideal retirement?
Well, I feel the same as you guys. We are fortunate to where we can do what we love every day.
Yeah.
And literally, we would have been having this conversation over dinner or on the boat, or we would have had this conversation anyway, because that's how much we love talking about money and finance and investing. But like Travis said, I do have a goal of being able to have homes in multiple places. I love skiing. I love the mountains. And I also wouldn't mind, being able to spend time somewhere else, or take my family, my whole entire family, and we all go travel. You know, that's kind of how I see the ideal retirement situation for me.
I guess there's no reason why we can't do that now. And I guess we have. I mean, we've already been to 60 to 80 countries in the past several years. And I really like sabbaticals, taking some time off, a few months or a year or something. I mean, 2018, we didn't really do much. I guess we had the skill incubator thing in Cayman Islands, which was really fun, and had some trades. And then, I don't know. I guess it comes in waves. As long as you're enjoying what you're doing, you're playing the game, and you feel good.
Yeah. Yeah. I think taking on projects too that keep you learning is really important, or it is for me, and keeping your brain working. I would love to figure out how to do how to mix music at some point. You know, I haven't had the time
DJ
yet to do
Trav.
it. Yeah, why not? Like I you know, I love electronic music. Like I want to be able to produce it or try to produce it at some point. I don't know when that will be. Maybe when I'm
you let
50
me know
or something.
Because I'll go in with you on that.
She'll be fist bumping right next to you.
Yeah. There's a lot y'all don't know about me.
Uh-oh.
I used to want to be an EDM DJ.
I guess we could start a separate channel just for y'all's like mixes.
I had a website. It was called fortheloveofelectronic.com.
Oh, wow.
Yeah.
Yes.
And I used to just post good songs.
Nice.
We
That's
need to
how much I
revive
liked
that.
it.
Would people? Do you think if you got good enough, would people show up to see like if we're 40 or 50 when we finally get time to do this? Do you think people would show up? Like if we were any good?
I think
would they
so.
watch a 40-year-old DJ?
I think
50-year-old DJ?
so. Yeah.
I don't know. You guys leave a
Look
comment
at
and let us know.
Tiesto's like, how old is he now?
Yeah.
He's old.
But he got famous when he was younger.
Well, true.
So I don't know. I don't know.
Doesn't matter. I think if you put out good stuff, people are going to like it.
Yeah, it's all about the good.
You could put a different, younger face on it, maybe, and they'd be like, surprise, it was me all along.
Or just be like Dead Mouse and just
put a helmet on.
Yeah, you don't know who that is.
Over your head.
That's true.
Yeah. Cool, man. Well, fun combo. Hey, guys, thanks for watching. What should we tell people to do?
Go to WeTalkMoney.com and submit your questions, please.
Yeah, we'll get to them next week. I don't know how long we went today, but this was
finance questions.
Yeah, and
investing questions.
if you are interested in the trade alerts, like some of the ones we were showing today, we do have the community. You know, it's very high quality. We, let in people who really fit our profile. But if you are interested, you can check it out. We have information on.
We'll link it up.
WeTalkMoney.com has the community info too.
Yep. Yeah, if you want to come hang out with us, invest with us. Yeah. All right.
Awesome.
Well, thanks for watching, guys. Subscribe to the show. Share it with anybody you think would get value. Like it up if you want to see more like this, and we'll see you next time.
Ciao.